Welcome back to Investing Talk Podcast. This is where we sift through the information you've gathered, maybe articles, research, your own notes, and really pull out the key insights. Our mission, well, it's to give you a shortcut to being genuinely well informed, maybe with a few surprising facts, and just enough humor to keep things interesting. Today, we're tackling a question I suspect many of you might be asking. Is QuantumSi a good buy right now? We've got a whole stack of analysis on this. Pretty fascinating life sciences company. They're really pushing some technological boundaries. Now, before we unpack all that, if you find these deep dives valuable, maybe take a second to subscribe, like us, leave a comment. It genuinely helps us reach more curious minds like yours. And hey, if you're feeling extra generous and want to support what we do, maybe consider buying us a coffee. Your support really does help us keep these explorations going. Okay, so let's step into the lab, then into Ledger. We're going to explore if quantum-size, cutting edge science really translates into a compelling investment. Or is it more a case of brilliant tech still waiting for its financial breakthrough? To kick us off, maybe you can start with the basics. What exactly is QuantumSi and what's so interesting about their tech?
Right. So QuantumSi is in the life sciences space.
Yeah.
They're specifically focused on something called next-generation protein sequencing, NGPS technology. And what's really fascinating, I think, is their approach. They have these instruments, the Platinum and Platinum Pro, that offer really high-resolution single-molecule detection. Think of it like being able to read a book word by word rather than just guessing the story from the cover. That level of precision, well, it's a pretty significant differentiator in this field.
Okay, word by word. I like that analogy.
Yeah, and they're aiming primarily at research labs. They're emphasizing accessibility, ease of use. If they manage to commercialize this successfully, it could definitely give them a strong competitive edge. Researchers are always looking for faster, more accurate protein insights.
That sounds like a powerful vision for research, absolutely. But let's bring it back down to earth for a second and talk money, the financials. Because on the surface, those revenue numbers for QuantumSi, they look, well, frankly incredible. We're seeing a massive 182.62% year-over-year increase. Full year 2024 revenue was what, $3.06 million? And the trailing 12 months is $3.44 million. I mean, that's some serious growth.
It absolutely is. Impressive growth, that's the headline, no doubt. But, this is the big but, it raises that crucial question. What does it actually mean when you look deeper? Despite that huge revenue jump, the company's net income for the same trailing 12 months is deeply negative. We're talking minus $100.72 million.
Wow, okay.
Yeah. And earnings per share stand at minus 0.66 cents. So this isn't just a small loss. It tells you their innovations, while super promising, are incredibly expensive to develop and bring to market right now.
Running a marathon, burning cash like a sprinter, you said.
Yeah, exactly. And while their cash flow statements aren't published, those kinds of ongoing losses, they strongly suggest negative operating cash flow, which means, the company's likely burning through its existing cash reserves or it's going to need more fundraising soon just to keep the lights on and the research going.
That negative income is definitely stark. But, in high-growth tech, biotech especially, investors often look past today's red ink, right? They're betting on tomorrow. So despite these losses, what are analysts actually forecasting for future earnings? Is there optimism there?
Well, specific earnings per share forecasts aren't readily listed in the data we have, but the broader consensus on the stock itself, the rating, is actually a strong buy. This positive outlook, it seems primarily driven by the immense perceived potential of their technology and that growth trajectory in the life sciences sector. It's less about near-term profits, more about the long game. It's definitely a bet on the future.
A bet on the future. Okay.
And when we try to use traditional valuation metrics, well, it gets even trickier. The PE ratio, price to earnings, not applicable, obviously, because they're losing money, as we just discussed.
Right.
And data for price to sales, PS, or price to book, PB, isn't readily available either, which often happens with these very early stage companies. Their current revenue base is just so small compared to their market cap that these ratios, if you calculated them, would likely be sky high compared to mature, profitable peers. They wouldn't be very meaningful for comparison.
So we're leaning more on the story, the potential.
Pretty much. We have to rely more on that qualitative assessment, the growth potential, the market opportunity, the tech itself. That elevated valuation, assuming a high PS, it clearly reflects very high growth expectations and, let's be frank, a significant amount of speculative pricing baked into the stock right now.
You mentioned speculative pricing. How does that show up in what analysts are predicting for the actual stock price? Are we seeing a big spread in their targets?
Exactly. Spot on. That speculative nature is absolutely reflected in the analyst price targets. For 2025, we're seeing a really wide range. The consensus average is $2.38, but you've got some analysts way up at $3.42 and others much lower, down around 31.2 to maybe $1.89.
Wow, that's quite a gap.
It is. And that wide range, it really just highlights the uncertainty around the company's future. It underlines that speculative nature we were talking about.
Okay, let's pivot then. Let's look at the charts because this is where we see how the market's actually reacting, right? The pulse of the stock. The current price is kind of bouncing around the $1.82 to $1.88. But that 52-week range, it tells a real story of volatility. It goes from just $0.61 all the way up to $5.77. I mean, that's a roller coaster.
It really is. That's a good way to put it. And recently, the stock's actually shown a bit of a downward trend after some earlier momentum. It's trading below key short-term moving averages. So for you as a potential investor, the 50-day simple moving average, the SMA, is around $1.60. That's currently below the 200-day SMA. And technically, that's often seen as a classic bearish signal. Suggests some short-term weakness, potential headwinds.
Okay, bearish signal there. What about momentum indicators?
Yeah, looking at momentum, the 14-day RSI relative strength index is sitting at 68. Now, think of RSI like a gauge from 0 to 100. Anything over 70 is typically considered overbought, means the stock might have run up too far too fast. So at 68, we're definitely getting close to that caution zone. It could signal a potential pullback if the bulls don't keep pushing hard.
Right, nearing overbought.
Yeah.
And key levels. Support, resistance.
Based on recent trading, immediate resistance looks likely around the $2 to $2.20 mark. And you've got pretty strong support, it seems, near that $1.60 to $1.88 level.
Okay. And connecting this back to the broader market picture, the beta is 2.92. What does a number like that tell you?
Whoa, yeah. That beta tells you this stock has much higher volatility. We're talking nearly triple the volatility of the overall market. So put simply, if the market moves, say, 1%, you might expect QuantumSi to move almost 3%, either up or down.
So big swings are expected.
Big swings. If the market catches a cold, QuantumSi might just catch pneumonia. They're like driving a race car in city traffic, super powerful, but expect a very bumpy ride, especially when the market gets choppy.
Got it. High beta equals high volatility.
Precisely. But despite that technical weakness, despite the volatility, analyst consensus ratings, they remain quite positive, predominantly strong buy or buy. In fact, 67%, two-thirds, recommend as a strong buy. And that 12-month average price target is $2.38, which from current levels represents a potential upside of around 31%.
So the analysts are still quite bullish, looking past the short-term chart wiggles. But, the general market mood seems more cautious lately. The fear and greed index is down at 39, signaling fear. And QuantumSi itself has only had, 47% green days in the last month? Plus, doesn't seem to be much buzz on social media either. So given that kind of mixed picture, what are the potential catalysts? What could actually shift the sentiment and maybe give the stock a boost?
Good question. Short term, the big one is definitely the next earnings report. That's scheduled for August 6, 2025. Any surprises there, good or bad, could move the needle. Also, continued adoption, seeing more labs actually using their NGPS instruments and reporting strong performance, that would be a really positive catalyst too, real-world validation.
Okay, earnings and adoption. What about longer term?
Longer term, you're really looking for success in broader market penetration, getting those instruments into a lot more research labs beyond just the early adopters. Also, potential industry partnerships, maybe even M&A activity mergers or acquisitions driven by their proprietary tech, that's always a possibility. And of course, releasing new instrument versions or significant software updates that make their platform even better. Those are the kinds of milestones that could really validate that long-term analyst conviction.
Makes sense. Now, with a company like this, pushing boundaries, innovation, there are always risks involved, right? What are some of the key stock-specific risks that someone thinking about this company really needs to have on their radar?
Absolutely. Top of the list, I'd say, is that high cash burn we talked about earlier. Those ongoing losses, the negative cash flow, they put real pressure on the balance sheet. That's a major risk. Then there's the valuation uncertainty we discussed. That wide range in price targets, the speculative pricing, means the market is still trying to figure out what this thing is really worth. That's a risk. And finally, there's significant execution risk. It's one thing to have cool tech, it's another to successfully commercialize it and get broad market acceptance. They have to prove they can execute on that vision. That's a huge hurdle.
Okay, cash burn, valuation, execution. What about broader risks? Sector-related or market risks?
Yeah, on the broader scale, you've got sector-specific risks. This is a competitive field. There's intense competition from established, bigger biotech and sequencing companies with deeper pockets, Regulatory hurdles could pop up, or maybe just slow adoption by labs if the tech isn't seen as a must-have upgrade just yet. And then, of course, the macroeconomic and liquidity risks. We already hit on that high volatility with beta near 3. And while trading volume seems moderate, in really volatile market sessions, you can see wide bid-ask spreads, which can make getting in or out at the price you want a bit tricky.
Okay, so a fair number of risks to weigh against the potential. Bringing it all together then, how would you rate QuantumSi overall? What's a big picture takeaway for our listeners who might be considering this stock?
Right. Crunching it all down, our overall rating for QuantumSi comes out as a 6 out of 10.
A 6 out of 10. Okay.
Yeah. And the rationale is pretty clear, I think. It shows strong growth potential, definitely, in a really promising cutting-edge market niche. That NGPS tech is exciting. However, it's still very early stage. You've got those persistent losses, the high cash burn, and that significant volatility. So while the analyst consensus and the differentiated technology are definite positives, the company's financial health right now and their ability to execute, those remain pretty significant risks you absolutely have to factor in.
And based on the technicals, if someone was considering an entry, is there a prudent range you'd suggest looking at?
Well, given the recent support levels and where the moving averages are, a potentially prudent entry range might be somewhere between, say, $1.60 and $1.80.
Oh.
Again, with caution.
Okay, $1.60 to $1.80. And what about the investment horizon? Is this a short-term play or more for the long haul?
Definitely not ideal for short-term investors, generally speaking. That high volatility and the current sort of bearish sentiment make it tricky for quick trades. Though, someone might consider a very speculative position with super tight risk management, maybe playing the run-up to earnings, but that's high-risk stuff. It's much more suitable, really, for long-term investors. People who have a higher tolerance for risk, who really believe in the core technology, and, crucially, who can stomach potentially large swings in the stock price along the way.
And for those perhaps thinking more actively, maybe trading it, what are the key levels they should be watching? Stop loss, take profit ideas.
Sure. For active trading, based on current levels, a potential stop loss might be placed just below that recent support, maybe around $1.50 to $1.55. Give it a little room, but not too much. And for a take profit target, you could aim towards that analyst consensus area and previous resistance, maybe around $2.30 to $2.50.
Okay, stop loss below support, target near consensus.
Yeah. So just to summarize it all, QuantumSi is definitely a high-risk, high-reward kind of stock. It's truly best suited for those long-term investors with strong conviction in the tech and, critically, the ability to handle significant volatility. Patience and nerve required. Short-term traders, they really need to proceed with extreme caution. Use very tight risk controls, almost like a surgeon, very precise.
What a fascinating deep dive. This analysis of QuantumSi, it really just lays bare that tension, doesn't it, between truly groundbreaking technology and the harsh realities of early stage finances. It really makes you wonder, how much weight should you actually give a company's future potential versus its current financial health? Is the future always worth betting on, even with deep losses today, or are some innovations maybe just too early for prime time investment?
It does raise a really important question, and one for you, our listener, to think about. How does your own personal risk tolerance actually line up with the potential of these kinds of innovative, but let's face it, highly speculative opportunities? Understanding that balance for yourself, that's really key to making informed decisions that you're comfortable with in any market, but especially with stocks like this.
Absolutely. Well, thank you for joining us on this in-depth look at QuantumSi. We really hope this analysis gives you the clarity and insights you need to navigate these complex investment questions. Until next time, stay curious and keep learning.